All right, so I've got this thing recording for this session. Like I said, didn't have a ton of time to prepare for this session. We're supposed to have a guest host that canceled late last week. But either way, this is a good time to talk a little bit about what I ended the trading room with today, because it all kind of set up and surfaced in today's session. So we'll just carry that over. But there was something else I was going to mention about, the summer markets. As we're at the beginning of the summer, a lot of people have asked me, are these summer markets? Are those summer markets? Generally, summer markets are slow, but with what we have driving us, they're not. You see the volumes are up. We don't have 100,000, 110,000 coming in at 8 o'clock in the morning. We have 250, 300,000, well above average. And the ranges are really wide. And we're getting that. Let me cut the computer sound of the audio. We're getting that because of the different fundamentals that are around us. Is U.S.-China going to have a trade agreement? Yes, they are. No, they're not. Mexican tariffs? Yes. Mexican tariffs? No. A Fed that's not going to cut rates. Fed that's going to cut rate. Goldman Sachs says they don't think they're going to cut rates. These are big drivers. So the Mexican tariff thing created a relief rally, and they rallied us late last week, early this week. The other drivers, U.S.-China, right? The G20 meetings later this month. Is Xi and Trump going to meet? Right now, there's nothing on the calendar. When there is something on the calendar, and if it is a black and white comment, that's what these meetings are for, to reinforce and remind everybody what could move the market that could create a nice knee jerk. Yesterday at 11 o'clock, if you weren't paying attention to headlines because you don't have access to them, you didn't hear Trade the News or any other service say Goldman Sachs doesn't have a rate cut in their 2019 estimates. They don't think the Fed's going to move. That was a slow, great driver, never rallied from yesterday's high and broke for the next 2 hours, and then that wasn't because of the helicopter crash in Manhattan. That had happened an hour later. And then there was a rally when the New York governor came in and said it's an emergency landing that went bad. He purposely was sent out there to say that. You have to think like a trader. If you're in front of your screens, watch the news. And when he starts to make a comment that it's emergency land, it's a one-off event, the market rallied. That was kind of the bottom, temporarily. But understanding that ebb and flow, if you're not doing that, then you got, forget about all the other tools in your tool chest. That's got to be a sharp one. And I can't emphasize that enough. Yesterday at 11 Central, Goldman Sachs was a bearish report. Not a fast one, but one that if you stayed bullish and it kept going against you and you didn't know why, that's your fault. You didn't have to be bearish, you didn't have to be short, but you had to be able to at least recognize that was out there. It's not a coincidence. At 11 Central, after that comment, we started to get weak, and that was the high of the session. Not a coincidence at all. Now, for this session, what is a proprietary firm? That's from an old slide that I did. So let's disregard that. I just want to use this for to sketch on. All right, so disregard this. For today's meeting, all right, we know the drivers. What could hit the headlines that could make us go up or down? For one, President Trump have a meeting scheduled. I don't know how much it'll go up. I don't know if you could catch it. I don't know if it sustains, but it will be a bullish event. If that hits I think that's a possibility too, that's going to hit the wires at some point before the G20 meeting at the end of this month. I think it's June 28th, 29th, 2-3 day meeting. I think that's a possibility. Xi and Trump have a meeting scheduled in the afternoon of July, June 28th, something like that, right? Know where you're at on the map. What do I mean by that? Well, if this is a map of the east coast of the U.S., it's a pretty good map. If this is the east coast and the market's trading down here and that comment comes out, it's more bullish than if we already rallied and we're in Maine and that bullish comment comes out. All right. Know where you're at on the map. Make it a little bit easier to understand what the hell's going on. The other headline that's possible is this impeachment. Now, there was a gray area comment by Nancy Pelosi, the House Majority Speaker, about impeachment is not off the table. And we went down a little bit, but we were already in Florida. If you're thinking of where we were on the map, we already had sold off. At the time, it was trading 94. So it's important to set the table for if impeachment is something that they're going to move forward with and there's a black and white comment that comes out, then there will be some bearishness. That was just more of a political statement. It did create some weakness, but not as much as it should have, and it didn't. But again, if it's black and white, they're going to do something. It's knee-jerk lower for stocks. They don't want to see that uncertainty. I think this is a chance. It's a small one, but if there's a comment that says that they passed this USMCA, which is essentially the new NAFTA, I think if the market's a little weak, it creates a little bit of a bid, not long-winded rally, but I think if they ratify past this and it's some sort of black, when I say black and white comment, I mean like a pivotal comment, a switch. I think that creates a little bullishness. I don't know how long though. Just the fact that they are starting to make progress on trade deals, if that's indeed the way the headline hits. Any new tariffs he might impose on Mexico because he wants them to do more. We just got over that hump. That was something that was new. Last week at this time, we didn't understand or think that he'd pull that, and he did. So don't allow yourself to be surprised. Right now, they're on the honeymoon stages of that deal. If in a month or so he doesn't think that they're doing what they said they're going to do as far as helping with the immigration situation, then he reimposes the tariffs or the threat. Downside. Any kind of switch comment, that's what we're going to call them. Comments that are like a switch, lights on, lights off. Pretty pivotal moment to make the markets go up or down. Last week, it was Powell and kind of supporting the Dove camp, and the Fed started pricing in. The market started pricing in maybe 2 rate cuts in 2019. Big tailwind. That's the big tailwind we've gotten the last week. Because nothing really changed on U.S.-China. Mexico went from bearish to bullish, but the big tailwind that we got and why we're in the upper 2,800 even handle is because the Fed went from neutral to dovish in the span of like 10, 15, 20 days. They kept leaning more and more that direction. They meet next Tuesday, a week from today, next Tuesday, Wednesday. That statement might be a big one. So keep that on your calendar. We're going to meet before that next week at this time. But that FOMC meeting is going to be important. That's a week from today, but they commence a week from today. They finish a week from tomorrow at 1 Central with their statement. There's going to be more, I think, scrutiny on what they say at this statement or at this meeting than others because of what's going on. All right. I think you're prepared for that so you miss less. Are you going to catch every headline? Hell no. Sometimes it happens when we're sleeping. Sometimes it happens when you're not in front of your screens. You're in La La Land, or you took a break, or you're having lunch and you miss it. But if you miss it and you're sitting in front of your screens and you heard it and you didn't know how to anticipate, then that's your fault. You got to know what is driving the market in order to know what could flip us on a dime and make us go from down to up, back to down, and round we go. What is driving? Every morning in a prop firm, we'd have Scott. In about 5 minutes, 10 minutes, he'd give a preview of what was going on. He put out a wire, kind of collect all the data that we had subscribed to and put together a nice organized wire. I wouldn't read the whole thing. Nobody would read the whole thing. You pick through it a little bit. Economic numbers previewed, what number's bigger this month. This one's not big. This shouldn't matter. Fed's thinking this. ECB's doing that. And we're ready to go. I hope a little bit of what the 8 o'clock, 8:15 in the trading room does that. Hopefully that does that for you guys a little bit. But these meetings have to circle back on that because I learned very quickly how to know about economic and central bank conditions as a trader really quick. And I still understand that And that's what I think a lot of you guys understand more and more if you've come through me, because it was important. I was in the business in 1996 to 1999 on the floor, didn't understand central bank and Fed and economic numbers at all. It wasn't until I started at the prop firm and and um and got it from smart people. It wasn't an economist teaching you about economic numbers. You don't want to learn how to trade from an economist or an investment banker, okay? Because they're obviously macro. And economists always have reasons for why their 6-month projections were way off. Good question by Ron. The market, as far as stocks go, I want you guys to look this up yourself. Fed Fund Futures. I want you guys to research Fed Fund Futures, because if I would just go and tell you this, you'll know today and not know tomorrow. You stay on it. As far as what the Fed should do and when, Google Fed Fund Futures and see what percentage they have priced in for a cut for each meeting. All right. So what they'll do is they'll have the June meeting every 6 weeks, the July meeting, then I think it might be the September meeting, and then the December meeting. However they lay out what percentage they're going to do a cut or move or a hike, depending on, in this case, a cut, Ron. But the Fed Fund Futures tells you what percentage they think that market, because that market's trading what the Fed's going to do in the future. Fed Fund Futures, Google it and see what percentage they're pricing in for a rate cut at the next meeting and the subsequent meeting after that. All right. As far as the stock market, if you look if you got to know pivot points. So if you look at a timeline and you say this is a marker when Powell talked last Monday, and you look at where stocks were then and you look at where they're at now, you could say that there was a pretty nice rally off of when Powell talked early last week. Was there anything else really bullish? Yeah, when Mexico, those tariffs weren't going to be implemented. That was later last week and then Monday. But for the first part of last week, we had the Mexican tariff headwind before it became a tailwind, and there was a transition to head back north. So the stock market's pricing in and this rate cut. They want it. Not at the June meeting, but at the July meeting. Not this next meeting next week round, but at the following meeting. They want the interest rates to go lower. All right. I think what the Fed is doing, this is a personal, in my opinion. I think what the Fed is doing is trying to jockey for the trade war, maybe hurting economic expansion. And they're trying to offset that, whether it's something that they're doing with political rhetoric backing us and our government, lining up. If it's going to be a trade war, might as well win it type of thing. And just signaling to China and the world, we'll cut rates too. It's a way we could, quote, manipulate our currency, even though they're not talking like that. I think that's why the dovishness come from our Fed. They're not fighting that there could be a trade war. It's a realization. And I think the biggest driver that would send us up, up, up and away would be U.S.-China reaching a trade agreement at some point this summer. That's why the summer markets are going to be summer markets, and it's important to know that now. Without these drivers, it would be slow, uneventful. Once in a while, we get a move, 100,000 volume by 8 o'clock Central, all that stuff. So does that answer your question? Fed Fund Futures, Google it, see what percentage they're pricing in for a rate cut and at what meeting. That's going to be your closest tell to what the market thinks. Fed Fund Futures. It used to be a real pit at the Board of Trade, that contract. There's a lot of people out there, guys, that don't understand dovish and hawkish and what that means as far as central bank stuff. And dovish means bullish for stocks and bonds. And they don't even know why. You got to know all that stuff. It's all, if you're in this meeting, it's because you've done the edge course. All that information is in all the videos, in some of the courses. So you have to make sure you know all the terms and the phrases. I learned it really quick without having a glossary. at the prod firm. I didn't have a glossary for all these terms and phrases, and you pick up on them. You learn them. You ask, you find out. You ask once, you get the answer, and you know it forever. All right. So now what I wanted to talk about that I didn't prepare much for, but it surfaced today, was why we take the poll and why it's important. I could say this every meeting, and it would help you guys. That is ground zero. Ground zero isn't just a marker you set where the price is before a big event comes out is ground zero, right? Unexpected or expected event. Price is sitting right here. And we put a yellow line or some sort of line down there. So if it comes back down, generally it's going to work as subsequent support or resistance. Ground zero is often important on a big move. Now, it's also a yellow line that I put on my charts, as you guys see every day, for 5 years. As long as I've been doing the room, I always mark the open. That's ground zero. We'll call it ground zero for the day. So when we get a 50% or above pull in the room to be bullish for the day, it has nothing to do with whether or not you're right or wrong. It has to do with, hey, if you have an opinion, what is it? We're opening up 17 points above yesterday's close. Why wouldn't you be bullish? What's important to know is everyone's probably bullish. That doesn't mean we won't rally, but it does mean ground zero is important. So what do we do today? We rally 4 or 5 points pretty hard. And like I said, to end the room today, everybody's got 2 thumbs up. They're all excited. Look at this. I didn't catch that 3-point rally, but I'm going to find a spot to get long because we're bullish. When it comes back down, what did it do? Ran right through ground zero, right through the open. That's what makes it tough to go back to where we came from when it goes through some good support, some good areas, and everybody's bullish to start. When I say everybody, 50+%. Not our room. The poll is just a sample size of where the rest of the world is. You've got to keep that in mind because the downside has a chance to follow through and extend itself like it has so far the rest of the morning. We just came off our lows 82 halves just now since we've been doing this meeting. It just gives you a better sense and better bias by knowing where other people are and going against conventional wisdom. That doesn't mean every time we're above 50%, everybody's bullish that we're going to reverse. Just means there's a chance if it starts to get through some important levels that the follow through is probable because you got all the, and here's the why. It should be obvious to why, as to why, because you got all these jerks, you got all these people who create an opinion having trouble changing it. And I said this also to end the trading room. It's important to say again, people, it's not coming up with an opinion that people have a problem with. It's changing it in any business, in any industry, in any walk of life. The old saying, opinions are like blank, could never be more true. So having an opinion isn't important. Changing it is. The first transition today talking about the successor of Draghi coming across the wires now. Neither bullish or bearish, in my opinion, that I could find. But anyhow, going back to the charts, the transitional moment on a bullish day, and we open right here and go straight up, like I said, should have been through these edge zones and then through the open, which was 07 even. Once it got through these edge zones, it was like, it's going to be hard to take out this high and sustain any upside. It had an awful chop to it for the next 45 minutes, don't get me wrong, and you could have got chopped up in here. But the fact that the downside was the right side based on what we just said, what I just said, shouldn't be a surprise. Now, if something in here, guys, came in somewhere in here, something fundamentally came in really bullish, could have changed that. But it didn't. Like if U.S.-China reached a trade agreement, well, of course, then this analysis of everybody's bullish It's below ground zero. It's going to go down with change. Going back to what I just said, it's not coming up with the opinion. It's when the hell do you change it? Let the market talk to you. Find a way to have the market talk to you so it's easier to change your opinion. It's really bullish. Everybody and their cousins are bulls, and you can't, and you do this through all this green. Are you surprised? It went to 92 in this chart alone, and now 82, trading 85. Ancillaries. The Russell got weak at some point. Guys in the room were mentioning that because now people are aware that market correlations matter. Help them get on validating their opinion or changing the damn thing. So I can't say this enough. When the market's really bullish, know it. They might be right, but when they're wrong, they're this wrong. This isn't something that we're just saying because it already happened. When they're wrong, they're really wrong. Then, where on the map does big stuff or stuff happen? We talked about this in previous sessions. I got to repeat it. When we get this Edge Zone audio and she comes in, remember what I said about she. She is a female. Let's do this. A female is selling and a male is buying. What's important is not when they come in, but where they also come in. Just look at my illustrations. If the market goes from here to here, okay, and then you see buying in a male voice, to me, it has more likelihood to go down than to continue up. Why? Because it already went up. Same thing, only opposite. If we break from this rectangle to this rectangle, and then you see or hear some selling, better chance to go up and bounce than go down because it already sold off. That doesn't mean it can't continue. But like we had today, number one, a reversal that was very possible the way we opened up, but then also on a bar down, just look at this bar down, we had, she'd come in and sell it. And I would tell people in real time, stays below her, they're still in charge. She come in 96.75 and it went offered and the 96 halves went offer. Stays below these 96.75s, she's still in charge. Sellers are still in charge. And it starts to give you better probability based on less randomness. That's all order flow is. That's all these sights and sounds are all about. Period. Start to use them to qualify what it is you're trying to do. If you get bearish and all you did was play it from the sell side since, I don't know, 9 o'clock this morning, that doesn't mean you made money, but you should have, right? You should have made money today if all you did was play it from the sell side in any chart pattern that looks like this. Did anybody just play it from the short side from there to here? You might have done it 3-4 times. You might have done it once. You might have done it 10 times. Did anybody just play it from one side, from upper left to lower right so far? Now, the people that did, doesn't mean you made money because you still got to do what? Time it. You could have sold it right there, and you could have sold it right there, and you could have sold it right there. And you'd be pissed because I guarantee you still wouldn't be in it down here. So good. More than I thought have replied that they did just play it from the short side from around 9 Central. It's all about visualizing where you're at on the map. You don't know that's going to look like the dead low or this is going to look like the swing low rather when it's happening, but you got to visualize that it did just break from here. That much I could tell you. That when this bar is coming down, it did just break from there. So the whole time I'm saying, well, if I didn't catch this thing, I got to wait for a pullback because I know I could be on the outstretched rubber band. I know this is a good session because I'm losing my voice or it's hurting. So I'm projecting a lot. That's when I could tell that I'm trying to hit some of these points of that I've said before, but are so important as to what the hell drivers are. Catch them when you're in front of your screens and they surface. Conventional wisdom sucks, so go opposite when it comes to trading. Let these guys get really bullish and have the market go through where they're all stuck long. If you're a profiler, see where all these jerk off profilers are all long or all short. Wait for them to be wrong because they'll be right, and that's what gets them the drug and keep continuing to do it because it feels good sometimes when they're all loaded up and they're long and it goes up. But if you're a good profiler, you're not doing what the profile says. You're doing opposite what the profile says if all the people who are also doing what the profile says are stuck, knowing where that is, when that is, and everything else. That's how you learn to predict better. That should be in one of the early sessions of learning anything about predicting the predictive skill, especially what we're trying to do here, trying to predict what the chart's going to look like based on the data that we have right now, and then anticipate in real time who's stuck. And the best way to do it is to see where the herd might go over the cliff. To always follow the herd, but not get trampled when you're wrong, because that hurts too. The herd actually isn't selling this market, believe it or not. The herd is, if the herd was selling this market, it would have trouble going down. The herd is selling the market to puke longs. That's why they're selling the market. So they're not necessarily selling to get short. They're selling to get out of longs. And it's a self-fulfilling prophecy that it helped that we opened up so much higher. That's why gaps fill. You know how the gap fills is a popular phrase out there. You probably learned it early on in your career, but nobody says, well, why does it fill? This is why it fills, because all the people not long from overnight or yesterday, but they're long after the day opens and they just get run over. They can't help themselves. That's it for this week. Like I said, we'll get Brett back in here when things settle down for him. He was supposed to be in today, but I'll keep you guys aware when we're going to have Credelli, because it's better to come to these events live and not wait for the recording when we have guest hosts so you could ask them questions. So I'll keep you guys apprised of when these guys come in or scheduled ahead of time. Most of you guys are in the trading room anyways for updates. If you're not, you should be. I want more people to jump on and say I got short when Goldman Sachs came out and said they didn't expect a rate cut for 2019 because they understood that the market was pricing in a rate cut, both on stocks and everything else. And not that Goldman holds any kind of leverage over the Fed, but obviously they're number one investment bank in the world. We're going to try to get Eunice Yohn in from Bloomberg News. She's on CNBC Asia, not Bloomberg News.